Happy New Year! But will it be a Happy New Year for GTA home buyers and sellers? That remains to be seen, but I'll dive right into it right here, right now on Live at Lunch, the first one for 2025. And thank you so much for joining me. I'm Lambros Demos. And by far, the most common question I'm getting these days is what will the market be like this year in 2025? Will prices go up? Will home buyers return? All these questions people, inquiring minds want to know. Nobody knows for sure what's going to happen, but some of the leading brokerages in this country and the Canadian Real Estate Association have their own opinions, which I will share with you briefly today, right here, right now. I've got my own thoughts as well. So let's dive right into it by first taking a look at what happened in December. But take that with a grain of salt, because the numbers for December are always going to be, depressed a little bit, right? It's the holiday season. It's cold. It's nobody wants to go outside and look at houses over the holidays and things like that. So, like I said, take it with a grain of salt. On average, every year we've seen over the last 10 years approximately 4,000 plus sales in December. So just over about 4,000 has been the average going back to about 2014. Now that's excluding the crazy pandemic years of 2020 and 2021, where home sales shot through the roof. So I'm not counting those years. On average, December is just over 4,000 sales in the Greater Toronto area. This last December, we saw about 3,300 sales or thereabouts. It was about 21% lower than the average, which again, is a large number. Things are depressed. But the good news is that it's higher than it was last year. So it's going in the right direction, right? And, only time will tell what the rest of the year is going to look like, let alone next December. So again, don't read too much into the December stats. Really quickly, we saw decreases all across the board, including prices and sales activity, but supply as well went down. So in Toronto, for example, supply went down about 28% month over month in December, and sales went down 47%. Again, because nobody wants to list their house in December, and nobody wants to buy in December, usually, unless they're looking to get a good deal, because the sellers that are on the market in December probably are in a little desperate mode to sell, right? Otherwise, why would they list over the holidays? Prices fell approximately 4% month over month, but again, don't read too much into that. In Mississauga, prices fell about 2% month over month. Supply went down about 28%, while sales dropped about 35%. In Brampton, similar story. Prices fell about 7% month over month, while listings or supply went down 24%, and sales went down about 39%. Very similar to the Mississauga numbers. In Oakville, we also saw a decrease. Prices went down about 11% month over month. That's a large number, yes, but remember, Oakville is a small sample size, so you're going to see greater fluctuations in those numbers. And then supply went down about 35% in Oakville, whereas sales went down about 45% in Oakville. Again, December stats are what they are. It's more relevant to look at December over previous Decembers, etc. And like I said, this last December was below average for sales in December, but up over last year's numbers. So hopefully that trend will continue. So December and January tend to be slow months, so we'll see what happens this month as well. But all signs point to things getting better, right? So I'm anticipating the January numbers to be better than December's, and the rest of the year as well to pick up. These are my own thoughts, and they're based on several things from what I see on the ground. Basically, what's happening day to day in the market. Also reading lots of reports from the top brokerages in the country, Royal LePage being one of them, and also the Canadian Real Estate Association. So let's jump right into that. But feel free to stop me anytime if you have any questions, etc. You may ask your questions here while I'm live, and I'm happy to answer it while I'm live. And you never know who else out there has the same question. So by doing that, you're actually helping others as well. So if you'd rather send me a DM, that's fine too. We can do that. Or if you're watching this on the replay, then by all means, you can still ask your question, and I'll try to answer it as soon as possible. Right. But thanks to everyone for joining me here. And so looking at the Canadian Real Estate Association, CREA, they always come out at this time of year with their own predictions of what's going to happen over the next year. They're predicting national sales to go up about 6.6%, which will take us to about 500,000 units across the country. And then we're looking at this past year, it went up about 5.2%. So this is, this is a reasonable prediction because everybody's expecting things to go up anyway. So as far as prices go, they're expecting prices on a national level to go up about 4.4%. Now, obviously, different regions are going to have their own variations, right? Places like Toronto and Vancouver are going to go up higher versus places like Quebec or Nova Scotia or Alberta, et cetera, which may not go up as much. And again, these national predictions are in line with the top brokerages in the country. Royal LePage is predicting a 6% increase in home prices across the country for 2025. And the other one, REMAX, is predicting about 5% increase in home prices across the country. And this is due to rising demand, obviously. Consumer confidence is getting better, and I'm seeing that on a daily basis as well. The market remains competitive. And what CREA says here is with demand continuing to rise in urban centers and suburban areas due to population growth, economic recovery, and strong immigration. Now, some of you may say that the immigration is slowing down, and that's true, it is. However, when people immigrate to this country, they don't buy a house right away. It usually takes them about 3 to 5 years to buy a home. And the immigration peaked about 3 to 5 years ago. So all these people that came to this country may now be in a position to buy a house. So I think some of that has to be taken into consideration as well. So there should be more home buyers in 2025. And as far as interest rates go, that's the other key factor. Okay, we saw 5 consecutive interest rate cuts in the latter half of 2024, and everyone is expecting more interest rate cuts to come in 2025, maybe as early as this month. January 29th is the date that the Bank of Canada is going to tell us whether or not they're cutting interest rates again. They usually base it on inflation. And if you recall, inflation dropped to about 1.6% in was it September? And then it bumped back up to 2% in October, but then dropped again to 1.9% in November. So it's hovering around that 2% mark, which is the Bank of Canada's target rate. So as long as it stays there, the Bank of Canada will continue on its course of cutting rates. And the Bank of Canada even said as much, that they would continue to cut rates, probably not by huge portions like they did the last 2 cuts of 0.5%. Probably it's going to be around 0.25%, if at all. So interest rates are expected widely to be cut by everybody. And then again, the GTA is always going to attract people, right? It's a global financial hub, right? It has a growing tech sector. So a lot of people will gravitate towards the GTA, newcomers, when they come to Canada. There's nothing wrong with other parts of Canada, but this is probably 50% or more of where all the immigrants come. Now, having said all that, I have to note that the condo market is a little bit different animal than the low-rise home market or the detached market. Most of these predictions relate to detached homes, low-rise homes, and Royal LePage, my company, is predicting a 7% increase in prices in the GTA for low-rise homes. But on the condo side, they're predicting only a 1% increase, right? So there you can see the discrepancy between the two. And many people are asking why this. Well, we had a shortfall of first-time home buyers over the last couple of years because interest rates were so high. People couldn't afford to get into the market, or they couldn't qualify. And the main product for first-time home buyers are condo apartments, right? So because of the price point. So when you take away that segment of the market, obviously, that market is going to suffer, right? So that's one reason. Another reason is that seniors were also a large purchaser of condominiums, high-rise condominiums, as they downsize, right, from their 4 or 5 bedroom homes into something smaller, into a 1 or 2 bedroom condo apartment. But a lot of seniors haven't been doing that, right? So they've been staying in their homes longer, right? Again, different reasons for that. It started with the pandemic. People were afraid to go into seniors' homes and moving out on their own. People tend to be slightly healthier these days, being more active and staying in their homes longer. A bunch of factors, right? So, but that the bottom line is that has taken away from the basically the purchases of condo apartments. Now, will it come back in 2025? A lot of people are saying yes, it will. So they're seeing more first-time home buyers enter the market in 2025. So Royal LePage and other entities are predicting that. I think it's reasonable because when you look at home prices, they've been pretty steady for the last few years. They've been pretty flat. Right, so when you look at year over year, prices went down about 1.5% overall, but that's but up 1.6% from 2 years ago. So they pretty much just stayed flat over the last couple of years, and I don't see a huge increase in home prices year over year, especially in the condo market. So the price of homes should stay relatively flat, but then you got interest rates coming down, so that will allow more people to qualify and more people to enter the market, right? So, and as I said off the top, consumer confidence is back. A lot of people are, anticipating, hoping to get into the market this year. In fact, REMAX did a survey, and about 73% of homeowners are confident about the market and think it's still the best investment they can make. So consumer confidence is high. People are still, see real estate as a great investment, and a lot of people do want to own their own homes, etc. And a condo apartment is probably the first stepping stone. So I think you will see that market improve. What else here? So, I mean, it's no question it's been soft over the last few years, the condo market. But there's, if you recall, there's a lot of new developments in the works since the pandemic as well. And a lot of those are slated to be opened this year or finally opened. So that's going to add a bunch of inventory to the market, which may soften prices even more, at least in the first 6 months of the year. So again, giving first-time home buyers an opportunity to get into the market. So hopefully that'll drive up sales as well. And don't forget the new mortgage rules, right? So now, thanks to the Canadian government, they have allowed first-time home buyers to take out 30-year amortizations for anything that they buy, whether it's new or resale, doesn't matter. You can get up to 30-year amortizations, and what that does is it lowers your payments per month, allowing people to qualify more, because then they look at your monthly income and decide if you're be able to qualify for that. Also, when people are planning their own budgets, how much can they afford to spend per month? And don't forget the other new mortgage rule change that they made was they've increased the cap for putting down less than 20% down. It used to be 1 million. Now it's at 1.5 million. That may help people get into the low-rise market. You can get in with less than 10% if you have it, and again, if you qualify for the monthly payments. As well, one thing that seems to be overlooked is that the stress test has now been eliminated when you change lenders. Okay, so it used to be that, let's say you're at BMO, but want to shop around. If you stay with BMO, you don't have to be stress tested. But if you want to go to TD or Scotia or any other type of lender, you would have to be stress tested. Now that has been eliminated. So homeowners and those about to renew are free to shop around, right? So that's going to create more competition in that market. And it may help people decide whether or not they sell this year. And don't forget, again, something that tends to be overlooked is the 2020, when the pandemic came in, we had a basically respite in the market for 2 months, from March to May. Nothing was selling, everything was dead. But then after that, things started picking up, sales started picking up, and they didn't stop. June, July were crazy. They hit record numbers in sales, and the rest of the year was the same thing. And then 2021 was another boom year for real estate. But since the second half of 2020 we saw record numbers of sales, most people took out 5-year terms. And now we're in 2025. So those mortgage terms that people took out during that peak period are coming due this year. So what's going to happen? Are they going to renew? Possibly. Interest rates went up. The reason that they got in was because interest rates were so low. But now, yes, interest rates have gone up. So people may or may not qualify to renew. They should, in theory, they should qualify, because don't forget, there was a stress test back then when they got in. So they were qualified at 2 points higher than what they actually got. So let's say they got a 2% interest rate. They'd have to qualify not at 4%, because the minimum at that time, I believe, was 4.75%. So they had to qualify 4.75%. So if interest rates are at 4.75 or less right now, then in theory they should be able to qualify for their renewal of the mortgage. However, life happens, circumstances change, life changes, and if somebody lost a job or had to change jobs or whatever, there's been a breakup, etc. All these things come into play 5 years later. You never know, right? So they may be in a position where they need to sell or want to sell, right? Or let's say they're tired of the house, they want to move on, they're going to sell. Or maybe simply maybe they could qualify, but they don't want to pay that extra amount, right? And then they got so used to paying that 2% interest, and all of a sudden the payments are going to go up on a monthly basis, and they don't want to spend that money, even though they can. So they may think of downsizing, or they may think of selling outright. So you never know what's going to happen with people. Everybody has to make that choice. But I think the bottom line is it's going to create a lot more activity in the market. So that's why I'm predicting that it's going to be a busier market. There's going to be more sales. There's going to be more people entering the market as well. So we should see a lot more activity in 2025 than we did in 2024, and certainly over 2023. Having said all that, if there are any questions, again, by all means, I'm happy to go over it with you. I know it's a lot to digest, but feel free to reach out anytime. I'm always here for your questions, whether it's here on Instagram, or if you want to reach out by phone or text, you can call me 416-520-0222. You can email me as well, lbd@royallepage.ca. Always happy to hear from you. Stay safe, everybody. Have a great day.